Hey traders, one of your favorite harmonic scanner educators here, guys, and I just want to kind of give you, I want to show you guys how to use my risk growth log, okay? This thing has been phenomenal for me in my trading journey. For those of you that are looking to, take your trading to the next level, looking for a log or a journal, something to help you take your trading, over the edge and be more disciplined and focused in on your trading, guys, this is going to be phenomenal for you. Honestly, if you don't have a risk log or a trading journal, guys, I don't even know how you are trading because, to me, you're shooting fish in a barrel. And you want to be a lot more methodical of that in your trading approach, guys. The difference between a profitable and non-profitable trader, guys, is just having a plan, staying consistent and being focused, right? Those are you that are all over the place. 1 minute you're using big lot sizes, next minute you're using low lot sizes. It's always going to be hard for you to grow your account consistently. And the name of the game, guys, is to profit and grow your account consistently. Of course, you're going to take losses along the way, but if you have a plan, those losses, guys, will be minimal, right? And you'll live to play another day. And so this is why, I created a risk log because, I was like you, I didn't have a plan. I was just like, okay, well, today I feel like doing $10 a pip, or today I feel like doing 50 cents a pip. It doesn't work like that. Your risk, your lot size, your account balance now should dictate your, how you approach that trade. And guys, this risk log that I've created is going to do just that. Guys, it's so simple to use, very intuitive. It takes the guesswork out of understanding what your risk should be. This is the perfect risk management tool for your trading journal. And I'm glad that I can kind of provide this to you. It's something that I created for myself and my team. And we've had such phenomenal, success utilizing this tool. And so for those of you that want to take advantage of it, great. I'll put the download link, with this so that way you can download it yourself. The reason why I like the platform where you could download it is because if I need to make an update to this sheet, I can do it. It'll send you once you download it one time, if I make any changes or updates to it, or if somebody needs something differently in here, I can add that change, guys, and send it directly, and you'll get an update saying that it's been changed, and you can go re-download it, right, with those updates. So I'm excited to be able to provide you, this risk management tool. To me, it's the ultimate risk management tool. To me, we see too many, growth charts that say, hey, you guys, let's take account from $100 to $1,000. Well, guys, typically they're not showing you what happens if I lose. Then how do I grow my account from $100 to $1,000? This tool right here that we have will show you exactly how to grow it, whether you take losses or not. And again, so results aren't typical. Past profits doesn't guarantee future results. So therefore, those growth charts to me are a little misleading. But what I want to do is I want to give you something that can, just focus in on, proper risk management. So let's get started on this risk log. I'll show you exactly how to use it. If you want to download it, great. If not, guys, I completely understand. Again, this is just to help you along in your trading journey, so you can be beast phenomenal traders. Let's get it, guys. So first thing I'm going to do is I'm going to show you guys the risk log. So here's something that's very important, guys. When you open this up, you're going to see, things highlighted in yellow. You're going to see things highlighted in green, right? Everything highlighted in yellow are going to be your manual inputs. So therefore, you're going to manually log this information, okay? Everything else, I have a formula based that's going to help you along. Guys, this is also important. This is only for Forex pairs and gold, okay? So it's going to literally calculate your lot size, your risk, the amount of pips that you're risking, the amount of pips that you're gaining. Guys, it's going to manually calculate it based off of which pair you're trading. So if you're trading gold or JPY pairs, guess what? This is going to calculate your stop loss and your pips for you. So those that struggle on understanding how to calculate pips, don't worry. I have a formula in here that's going to do all of that for you. Again, I want to make this simple for the user, okay? But this is important. Again, the yellow, right? These are going to be your manual inputs, and we'll get to these here later. But I want you to do, first thing you do, I want you to scroll all the way to the right, right? We're going to go, I want you to go to cell Z2, right? So Z2 says initial balance. Right here in AA2, right, you're going to input what your starting balance is. So if you got an account with $1,000, you just type in 1,000, right, like I did here. Now, if you have an account with $100, you type in 100, right, 100. Now, look, this is, if I type in 1,000, right, your starting balance, this is going to now drive this starting balance number here. Okay, starting balance number will be driven from that. If you put in 100, right? Let's go back to our example. If I put in 100 there, look, the starting balance here in cell I5 says $100. Okay, so for our purposes, we're going to put 1,000. Now, the next input, pips one multiplier. What is this? This is your reward to risk ratio, right? This says, listen, if I'm going into a trade and I want to win 2 pips for every 1 pip I risk, I put a 2 here, okay? Now, if I want to say, listen, I want to risk 1 pip for every 1 pip I can gain, I put a 1 there. If I want to win 3 pips for every 1 pip I gain, you put a 3 there, okay? And so on and so forth. For our purposes, I'm going to put 2 because I like to, when I enter a trade, I like a 2-to-1 reward to risk ratio, okay? These numbers, this number here will then drive your balance, your risk, your lot size, and all of that, okay? So that's a very important number. Make sure you input that. Now, let's scroll back over to the left, right? We'll go back to our start here in cell B5, right? Again, these yellows, these are be manual inputs. So again, this is a risk log. So you need to log your trades on a daily or, on a trade by trade basis. So let's say we enter this trade, right? We want to trade. Today is October 2nd, 2018, right? Let's say I want to trade GBP AUD. I'm going to enter that trade. I've analyzed it. I'm ready to enter it. Okay. Now for this particular trade, let's say I want to risk 3%, right? Now you can risk 5%, 6%, 7%, 10%, totally up to you, right? But I recommend 3% risk per trade. I don't want to risk no more than 3% of my account per trade, guys. Now, but again, some of you are a little more aggressive. Some are a little more conservative. Some may want to risk 2%, 1%. Me, I'm going to put 3% for our example, right? Now, the entry price. This is, once I do my analysis, I say, hey, listen, I'm going to enter the sell at 1.8. I'm going to enter the trade at 1.8400, right, for this particular pair. You can, this could be your sell limit price, buy limit price, sell stop, buy stop, or market execution price. Whatever it is, you put that in the entry price, right? And then because we're logging, I want to know if I'm buying or selling at that price. So I'm going to put a buy there, okay? So I'm going to buy this. Let's say my stop loss, I say, okay, well, here's the analysis. My stop loss, should be at 1.8370, right? Well, how many pips is that? Well, look, if I go over here to the left in column R, right, it tells me that my risk is 30 pips, right? It calculated that for me, 30 pips. If you don't know that by just looking at it, you could this column will now calculate that for you. Now, here in column Q, it tells me that my pips 1 is 60. How did it do that? Well, again, guys, I told you I wanted a 2-to-1 risk to reward ratio. So therefore, I know that, listen, if I want a 2-to-1 risk to reward ratio, I want to win 60 pips on that particular trade, right? So then therefore that calculates at 60. Now, look at this. It also in column J calculates and tells you before you enter that trade, boom, here's what your lot size should be if you want to risk 3%, right? Now let's say if I have a $1,000 account, I'm risking 30 pips, right? That's what column R told me, is that my pips risk is 30, right? So column J tells me Well, if you want to risk 30 pips and you want to risk 3%, well, then you need to go in the trade with a 0.1 lot size. Okay? What does that mean? Well, 0.1 times 30 is what? Right? So 0.1 is 1 USD per pip. So that's $30 out of 1,000, right? So that's 3%. So look what happens. If I win, if I want to risk, column U tells me my potential risk on this trade is $30. So if I lose this trade, right? If I lose this trade, it's telling me that if I lose, that my account balance would be 970. 1,000 minus 30 is 970. If I win, right, at $1 a pip, I will profit $60 and my balance will grow from 1,000 to 1,060. Guys, you see that? Column T tells me my balance if I win. So let's say I win this trade, right? So column V, again, it's in yellow. You need to manually input it here. So I'm going to put I won. Did you win? I'm going to put a yes there. And in column B, you're only going to put yes or no. Yes or no, right? So for this particular trade, I won, so I'm putting a yes there. So if I win, then my balance on the next trade should be, I should start off with 1060 in my account, right? Boom, look at column I now says 1060. $1,060 that I'm going to start off with. Now, again, this is a log, so make sure you log your exit price. If I won 60 pips, I ended the trade at 0.18460. That was my take profit. So I put that there. Okay. Now let's go on to the next trade. Let's say I want to trade GBP, JPY. So on 10/3, which was the date I'm going to enter this trade, right? I'm selling. I want to trade GBP, JPY. Boom. Let's say on this trade, I want to risk 4%. Okay, I'm going to put a 4 there. I want to enter this trade at 149.20. I want to sell it, right? And I want my stop loss to be at 149.6. Now, again, you calculate pips differently for JPY pairs and gold. Well, look, my formula already takes into account, boom, that we're risking 40 pips on that trade, right? 40 pips on that trade is our risk. Boom, look, our stop loss, our total lot on that is at 0.11. So now we know that we need to enter the trade for we're going to take one position. Our lot size should be 0.11. That will be 4% of our account at a 40 pip risk, okay? Now let's say you're a twin trader, guys, and you want to open up multiple positions. Well, look, I have a section for you, okay? Again, we want to focus on the risk. So we're still only risking 4% on this trade. But look, it tells you that if I want a twin trade, I need to now, one position should be at 0.06 lots, and the other position should be at 0.05 lots. So now that's calculated for you as well. Okay? So now if you want to open up two positions, you have your lot size for each position. Again, your take profit and stop loss will still be the same. Boom, look, it tells me that my potential risk on this trade is $44 at a 4% risk. If I win, I'm a profit $88 on this trade. If I lose, then I'm gonna lose $44 on this trade, right, at 2-to-1. Now, let's say for some particular reason you decide to exit this trade early, right? It doesn't go to your stop loss. Let's say if instead of going to 80 pips, you only get 60. Well, that's why this column is rated green, because you can manipulate this if you need to, right? Let's say that you don't get your 80 pips, you get 60. Well, guess what? Now your profits change, right? Based on that number, that 60 number versus the 80. So instead of making $84, you just made $66 on this trade, which is fine. So let's say for this particular trade, it hit our stop loss and we lost. So column V asks you that you win or lose. I'm going to put a no there. right? So that means that my starting balance on the next line should be 1016. Well, let's go to the next line. Well, look, 1016, right? Let's say if I would have said a yes there. Let's say if I'd have put yes there. Let's see how that changes that next line. Boom, 1126, right? So therefore, again, this is going to drive that number. So I'm gonna put a no. We lost that trade, okay? Boom. Now, let's say, the next trade we get into, it's a trade for gold, right? On 10/4/18, right? I put in, oh, oops, I messed up. What did I forget to do? I forgot to put my exit price, right? Because again, I'm logging. I want to know what happened on that trade. So because it hit my stop loss, I'm going to put my exit price on that trade with 1.4960. That's where I exited the trade. Now, 10/4, right? We're trading gold, XAU, USD. Let's say I want to risk 3% on that trade. I put 3% there. My entry price is 131.2. I'm going to sell, right? Let's say I want my stop loss to be 136.2. For those of you that know how to calculate stop losses, right? How many pips is that for gold, right? 50, right? So that means my risk column should show 60. So what I'm going to do, I'm going to scroll. I'm sorry, it should show 50. So I'm going to scroll over here to column R. Look what it says, 50. Perfect. We know the formula is working. It also tells me if I want to risk 3% of my account at 50 pips, boom, my stop loss on this, my lot size on this should be 0.06. Again, if you're twin trading, you're going to use 0.03. But if you're just one position, your lot size 0.06. Okay. Perfect. It's calculating for us. Now, it also tells me, well, if I have a 2-to-1 risk to reward, a reward to risk ratio, then if I risk 50, I should gain 100 pips. If I win that trade, look, I'm going to make 60 bucks on that trade. Balance, if I win, will grow from 1016 to 1076. If I lose that trade, my account falls from 1016 to 986, right? Because I'm risking 30 bucks, which is 50 pip risk, 3% of my starting account balance. So let's say we won that trade. I'm gonna put a yes there. What's the next thing we need to do? Well, we need to go in and log where we exited the trade. 121. I got my 100 pips. 121.2. Okay. The next trade. This one last example, right? 10/5/2018. We traded AUD and ZD. We're going to risk 3%. My entry price is 1.0822. I want to sell, right? My stop loss is going to be 20 pips, 1.0842. If I scroll over to column R, boom, look at my risk is 20 pips. Already calculated for us. Our pips one is 40. Again, same thing. Now it tells us when I go to put this phone in my MetaTrader 4, put this trade in my MetaTrader 4, my lot size should be at 0.16. That is going to give me a 3% risk. Okay. Boom. Let's say, my risk to reward again is 2, so I should go for 20 pips. For some reason, let's say I get 15 pips on that trade. I can override, put 15. Tells me I made $24 on that trade. I risked $32 if I lost. Let's say I put a yes there. I made that money, so I know that in my balance, if I win, should be at 1,100 bucks, guys. And this would have flowed straight into here. Would I straight down if I didn't have this blocked off? Boom. I'm gonna put my exit price because I sold 1.08. I made 15 pips, so my exit price to be 1.0807. That's gonna show right on your MetaTrader 4 what your exit price was. Again, those are the examples. Guys, this is how you use that growth chart. Okay, I'm going to put the link so you have access to it within this thread. You can click on it, guys. Also, I'm going to include a code that you can use. That way, you're not paying, the full price for it. So here is the example. Guys, again, the reason why I'm using this platform to get it to you, that way I can make updates and changes. And I can send them all to you simultaneously. So I'm excited for this. Hope you are too. You are going to so above these are the examples, guys. You are going to start right here where it says trade 1. this is where you start, okay? This will be where you put your first trade. Again, you'll go here to column Z and A, you'll put your starting balance, you put your pips 1 multiplier, boom, you keep track of your trades, everything will be calculated for you. Guys, this is a phenomenal tool. I hope to see you using it, hope to see you winning using it. Guys, if you have questions, reach out to me. I'm excited to provide this to you. Man, use it, be disciplined, be focused, watch your trading experience now change, guys. You'll be more disciplined and more excited, right? Because if you lose, now you know you don't have to chase trades to still reach your trading goals. Let's get them. Let's go out here and knock these goals out, guys. Salute to you.